In this video, we are going to talk about Amazon stock analysis. So before starting this video, please like this video and subscribe to this channel for our future updates. Amazon, Amzn, has a lot of major plans for 2021, including expanding the virtual healthcare network across the United States. Is Amazon stock a good investment in light of this? Amazon revealed on March 17 that its Amazon Care telehealth pilot program, which began 18 months ago at its Seattle headquarters, will be expanded to all of its U.S. employees and their families, as well as other businesses, this summer. The opportunity for Amazon to fuel its growth engine, and, by extension, Amazon stock, is immense if it can provide more effective healthcare services. Healthcare spending now accounts for about a quarter of the U.S. economy. Staff can interact with medical professionals via chat or video conference, and patients can connect with medical professionals, according to Amazon. Amazon Care will also send a medical provider to a patient's home for extra assistance. Bezos relinquishes his role as CEO. The Telehealth Initiative was Amazon's first big announcement since founder Jeff Bezos announced on February 2 that he would step down as CEO in the third quarter of 2021. Andy Jassy, the head of the company's cloud computing division, will be the current CEO. Bezos isn't going anywhere. He will take on the position of executive chairman and will continue to be involved in the business. However, one Wall Street analyst believes that the change in guard is further proof of a pivotal shift in Amazon's long-term strategy that would change the company's operations. Amazon, according to D.A. Davidson analyst Tom Forte, is slowly transforming into a much larger services firm. Rather than disrupting and destroying companies as it has in the past, Amazon would aim to assist them. They'll work with Amazon, but they'll still be competitors. It's a marketing tactic known as co-opetition. Forte told Investors Business Daily, "It's the younger, kinder, gentler Amazon. Rather than taking away all your sales, they'll help you make more." Amazon's vast warehousing and distribution capabilities will be made more readily accessible to other companies. Not only will Amazon assist them in advertising and selling their goods, but it will also offer logistics, storage, and shipping services. In addition, if an organization requires video streaming assistance, Amazon Video will help. And its cloud services operation, which is the largest in the world, is now used by thousands of large and small businesses. Platform for Amazon as a service. In a recent research note to clients, Baird analyst Colin Sebastian expressed a similar viewpoint as Forte, outlining the case for the Amazon as a service model and a subscription-based system. "We estimate that at least 75% of Amazon sales are effectively recurring revenue sources," he wrote. Based on robust fundamental developments in e-commerce, marketplace services, and cloud, Sebastian believes Amazon is significantly undervalued. His Amazon stock price target is $4,000. There are compelling reasons for Amazon to pursue a services strategy. The service industry is extremely profitable. Furthermore, the new Amazon could reduce congressional scrutiny on the company due to regulatory and antitrust concerns. Amazon is constantly seen by Congress as posing a significant obstacle to fair competition. The earnings report helps Amazon stock. Amazon has a lot of major opportunities coming up in 2021, which will drive Amazon stock's continued growth. The new CEO was revealed on the same day that Amazon released its fourth quarter earnings report, which blew away expectations. Earnings exceeded analysts' expectations by a factor of 2. In addition, the company's sales for the quarter surpassed $100 billion for the first time. Amazon's adjusted fourth quarter earnings were $14.09 per share, up 118% from the year-ago quarter and well above analysts' expectations of $7.19 per share. According to FactSet, revenue increased by 44% to $125.6 billion, compared to $119.7 billion anticipated. Amazon Web Services revenue increased by 29% to $11.6 billion, which was in line with estimates. Analysts expect Amazon to post adjusted earnings of $9.46 per share, up 89%, on revenue of $104.5 billion, up 38%, in the first quarter. What you're really seeing when you look at our financial reports is the long-run accumulated results of invention, Bezos said in written remarks accompanying the Amazon earnings report. Right now, I see Amazon at its most imaginative, making this the ideal moment to make the switch. Amazon's e-commerce sector has decimated the brick-and-mortar store model. When its third-party web hosting unit set the template for a modern cloud computing model, it put fellow tech titans to shame. Now it's tackling the nearly $4 trillion healthcare market, which, if it succeeds, will keep Amazon stock rising for years. Getting a glimpse of the prescription drug market. In addition, Amazon is entering the $350 billion prescription drug market. On November 17, the company released Amazon Pharmacy, a direct shot across the bow of drugstores and prescription drug wholesalers. Amazon Prime customers can receive discounts of up to 80% on generic drugs and 40% on brand products through the new unit. Advertising will be another source of revenue for Amazon in 2021. Around half of all adults in the United States launch their product search on Amazon. There are more advertisers as there are more searches. And, since COVID-19 has prompted more people to buy online, Amazon's ad revenue will continue to rise. In a report to clients, Needham analyst Laura Martin said, ad sales growth will be a strong upside profit driver for Amazon in 2021. Amazon, Amzn, will also be the strong leader in cloud computing services in 2021, led by Microsoft, MSFT, and Google, which is owned by Alphabet, Google. COVID-19's cloud operations have grown as employees operate from home and companies digitize more of their processes. Amzn Stock Technical Analysis. Timing is crucial in the stock market. When searching for stocks to buy or sell, it's critical to conduct fundamental and technical research that recognizes lower risk entry points with high potential rewards. Amazon stock has an IBD composite rating of 83, according to the IBD stock checkup method. In terms of the most relevant fundamental and technological stock picking requirements, Amazon stock currently outperforms 83% of all stocks. Its relative strength rating, on the other hand, is a dismal 41. The ranking tests market leadership by comparing a stock's price change over the previous 52 weeks to that of other stocks. Look for stocks with an average ranking of 80 or higher. Is Amzn stock a good investment right now? Currently, Amazon is not a purchase, but keep an eye on it. According to Market Smith's study, the Amzn stock has been in a long period of consolidation. However, Amazon stock has shaped a cup with a buy point of 3,434.10 since February 3. That's close to where it's trading right now. At the same time, Amazon's relative strength line has been slowly declining since it reported earnings. The relative strength line compares a stock's price to the S&P 500. The RS line of the strongest stocks is usually either confirming or leading the price of a stock into new high ground. However, on April 5, Amzn stock surpassed its 50-day moving average, which is a positive sign. The line allows investors to easily determine whether a stock is strong or weak. It's usually a sign of weakness when a stock trades below this line. If you're looking to buy large cap stocks, you'll find technical analysis of leading large caps in these articles to see if they're in or near a good buy region. You'll also find warnings to warning signs and sell signals that indicate when it's time to cash in on your gains or cut your losses short. You'll also learn if the latest stock market trend is favorable for stock purchases or whether it's a time to take protective action and sell. The benefits of purchasing Amazon stock. One of the major benefits of buying Amzn stock in the past has been Amazon's elite management team. Amazon's long-term vision, obsession with the consumer, and commitment to creativity at all costs have often been stressed by Bezos in particular. As the company's track record will show, these are more than just words. You don't get from an online bookstore to a multi-billion-dollar company and a tech behemoth without hitting home runs after home runs. Amazon continues to see potential with the shift to online shopping by customers who don't want to go to brick-and-mortar stores because of the pandemic, and in addition to its astronomical fourth-quarter results, Amzn has forecast first-quarter sales of $100 billion to $106 billion, far higher than the consensus $95.8 billion estimate. A bright future is worth much more on Wall Street than a strong previous fifth. Amazon's so-called other category, made up mainly of the company's advertising business, brought in solid revenue in the fourth quarter. As for AWS and its famous margins, they continue to expand. Last quarter, its operating margin was 28%, up from 26.1% the year before. While the e-commerce division is much larger in terms of revenue, its slim margins mean that AWS can carry most of the burden when it comes to operating income. Last quarter, AWS accounted for nearly 52% of the company's overall operating income, despite accounting for about 10% of company revenue. Cons to buying Amazon stock. While the fourth quarter was a successful one for Amazon, the company faces risks of overvaluation in addition to regulatory risks. The stock currently trades for nearly 100 times earnings, and Amazon's 44% revenue growth last quarter sets a tough precedent for growth going forward that will be hard to keep up with. Even though first quarter projected revenue implies between 33% and 40% growth, it's pace that will likely be tough to match in later quarters as Amzn laps some of its blockbuster 2020 quarters. With Amzn's stock price up nearly 70% in the last year, there's little room for error moving forward. And, of course, the transition in the C-suite from Bezos to Jassy was a surprise to markets. Jassy has been running AWS for years now and is viewed as a competent successor, but all the same, some acts that are impossible to follow. Bezos, who has proven to be one of the best allocators of capital ever, falls into that category. What do you think about our video? Was our information helpful? Let us know in the comments below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button and turn on notifications before you go. Thanks for watching.